And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning to all of you in my futures trading family. It's time for the market forecast for Monday, September the 19th. My name's John Hoagland. Thanks for trusting me with your time. I haven't seen you all since Thursday. It seems like it's been more like a month, more than just a couple of days. Hope you had a good trading day on Friday, and hopefully we're going to have a good trading week this week as well. As always, our focus here on the market forecast is context, good risk management, and remaining patient in our trading. As far as economic numbers this morning, we don't really have anything all that impactful, but taking a look at what's going on this week, we should all be well aware that it's the FOMC meeting week. It's a 2-day meeting beginning tomorrow. Tomorrow we also have housing starts and permits. Today, we have housing market index, of course, not expected to be very impactful. But a lot of the focus, other than FOMC this week, is going to be on the housing markets. Again, housing starts and permits tomorrow at 7:30 a.m. Central. Existing home sales tomorrow at 9 a.m. Central. Of course, the petroleum status report at 9:30 on Wednesday. And then, of course, the FOMC announcement and Fed chair press conference at 1 o'clock and 1:30 p.m. Central, respectively. Thursday, always the jobless claims, and we have misleading indicators, leading indicators. We always called it misleading indicators on the trading floor. And then, of course, natural gas report. There's a few shorter time frame bill announcements and a couple of auctions on Thursday. And then Friday, we have the PMI composite flash and Baker Hughes rig count as usual on Friday. So the focus, again, is going to be on housing and the FOMC meeting, although this morning a lot of the focus is on the fact that the world uncertainties continue to mount as the president has repeated that the U.S. troops would defend Taiwan in the case of an invasion from China. Of course, Beijing has reacted quite angrily to that information. U.S. stocks are set to continue lower this morning. Focus really on the first half of this week on the 2-day FOMC meeting announcement, as well as everything else that we have to keep an eye on. And crude prices continue lower on continued concerns that the global economy will not support demand. Personally, I'm happy that we're starting to pay a little bit less for gasoline, although considerably higher than it was 2 years ago. As always, the VIX this morning up about 5% to 27.73. The dollar index up slightly at 109.96, and the yield on the 10-year slightly higher, right around 3.5%. As always, make sure you hit the lucky like button. Share, comment, question, feedback, heckling, and love are always welcome here on the Market Forecast. Subscribe to our YouTube channel so you get notified when we do go live. We will not be having our standard group coachings this week. We're going to be presenting the Top Step strategies classes Monday through Thursday. So none of the typical group coachings, but some more information coming at you. Of course, we will be having Make Hoag Money on Tuesday and Thursday. And looking forward to adding a couple of sessions to those near the end of the month here and into October. We'll see how that goes. And as always, got to say good morning to everybody. Brian is first in the room. You win the prize, but it looks like Orion has been successful in the trading combine. I'm so happy that you have succeeded and you're getting your funded account. Very, very happy for you, Orion. Just keep doing what you were doing. Keep doing what you were doing. Getting into the funded account doesn't mean change everything. It means keep doing what got you there. We used to say, dance with the one you brung. Dimitar, good morning, Patrick. Ron, good morning, Ron Merlot. Shaw Cunningham. JD, good to see you this morning. It was a stone groove, my man. Brody, Joe, good morning. Chilling with Dylan. Jules, my brother Rick, good to see you this morning. Love you. Glitter Sandwich, Terry King. I would contact our support department if you're having difficulty staying connected to the Top Step platform or whatever. It's more likely something internet related on your end, Terry. I haven't seen that there's a lot of issues with people being able to stay connected, but definitely contact our wonderful support team. Glitter Sandwich, congratulating Orion. Scarlet Arachnid, good to see you this morning. Marcelo, Sarah Hall, as always, prayers, love, and good morning to you. Rooster, Tachyon, good morning, good morning. Haggle Matters, George. Lacey's crashed out already in the front room. She was out in the yard. She had a very busy day yesterday, so she's still tired this morning, I think. Jay, good morning. Tachyon, Dan Trader, Unicus with the quote of the day. Love this. 97% of people who quit chasing their dreams are hired by the 3% that didn't. Fantastic quote for us this morning, Unicus. Thank you very much. I know I enjoy those, and everybody here enjoys those. Rusty Golfer, my spirit animals with us. Ricardo, Serenity Trader, good morning. Mike, so it's rail strike week to pretty unprecedented supply chain issue. God, I really hope that doesn't happen. That's one of the worst things I think that can happen as far as, of course, our supply chain. Scott saw and he conquered. Orion saying thank you to everybody. Vince, good morning. Trading Research. Love it, Unicus. Sarah, yeah, we all enjoy those, Unicus. Please keep those coming. Alfred, Steven, Terry King. Yeah, that's probably internet issues, right? Caesar, new to Top Step, glad to be progressing in step one. Caesar, welcome. We're glad you're here. We are looking forward to your success. We're looking forward to all of your success. Tachyon up 388 for practice on Friday, but quite bold, but less burn. Yeah, I was wondering how the quadruple witching went on Friday. I didn't have a chance to really see. Looked like we had a pretty deep move to the downside, and then a lot of profit-taking, short covering by the end of the day on Friday. We're going to take a look and see what all that means for us today. JST Wave, good morning, Mike. Already happening. I haven't seen that. I hope that is not going to happen. Yeah, I heard that they had cut a deal on Thursday to Friday. Serenity Traders saying. TJ O'Connor thought the saying was, mind if we dance with your dates from Animal House. We were just leaving. Right. So, well, it's Monday. Mondays, slow starts for me. Most of the time, I'm going to try and stay really patient, and sometimes I'm successful at that, sometimes I'm not. Just depends on what's going on in the markets. We've got some markets trading at really important levels already this week. So when we take a look at these charts, you're going to see a lot of these markets already looking at and even moving through some of the weekly kickoff levels that I set up on Saturday morning this time. So we've got some early opportunities this week, it looks like. So I'm going to be, trying to stay patient. I think it's going to be a little bit difficult considering the current context of the markets. We got crude oil moving through weekly kickoff low to the downside. We've got E-mini S&Ps and the Nasdaq up against the weekly kickoff low. No acceptance down below, but certainly testing with those areas. Gold, a lot of space down below. The euro, we're kind of testing weekly kickoff low, or we tested through weekly kickoff low in the 10 years. So there's a lot going on this morning and some potential early opportunities. So Why don't we go ahead and jump into the charts? Back to the futures. Good to see you. I don't know that I've seen that name before, but welcome. Glad you're here, and thanks for saying good morning. Good morning, dead letter opener. Dead letter opener caught a nice long in the QM. Nice job. Let's take a look. So, starting with the daily and the mini S&Ps. We'll see if we can see what the opening does in crude oil, but this weekly kickoff low is really important in the S&Ps, if you ask me. I'm still kind of focusing a lot of my expectation in this area based on the activity from the 19th of July. This was kind of a change in the personality. We had a big up day on a lot of open interest, which we hadn't seen on up days to that point. Well, weekly kickoff low is the low from that session. We tested down to it on Friday and rejected. We've tested down below it so far in the overnight, in the overnight hours, and so far we're seeing signs of rejection. Of course, anything can happen. If something does happen with the rail strike or anything like that, we have to keep our ears and eyes open at all times, of course, but this is going to be a really pivotal area. This is the 20% off the all-time high is 38.44 on the continuation chart. We've got weekly kickoff low. We've got the low from that day that I'm looking at is kind of an important day, and we have last week's low all right in the area here. We are waiting for information from the FOMC meeting. I know a lot of folks are expecting a 75 basis point jump in interest rates. I think that's, of course, the highest probability, but we'll have to wait and see. So, a very important level down here on the daily chart. We're way through that in the Nasdaq. Nasdaq has been presenting as much weaker, so we'll take a look at the Nasdaq here shortly, but here's that move to the downside continuation. I got news at some point that the market was crashing, and then the next time I looked, it had pretty much recovered the majority of the losses from the overnight session. Settlement in the S&Ps on Friday was 38.90. We lost 8,200 in open interest, which leads me to believe that this rally that occurred was short covering. We got a whole bunch of people that just looked to take some profits if they were short above, if they were short below. Of course, they were limiting losses, but we had a pretty decent up move in the regular trading hour session on a lower open interest. That tells me again, short covering, profit taking. Where are we now? Well, we've now tested back down to the low from last week. We've tested to weekly kickoff low, and it seems as though, at least for now, we see some potential rejection. There's going to be no gap this morning, no runs, no hits, no errors, nobody left, and we're going to be opening in range and in value with high probability. We've got a lot of overnight shorts in this market that are already seem to be reconciling some of those shorts. This area down here, again, is very important in the longer time frame, not only to mention the day time frame. So if I get opportunities down near last week's low and weekly kickoff low, I'll be thinking about some sort of an execution, because I think that's might be where the big fish are. That's what we're doing. We're fishing. We're throwing in a line. Sometimes we lose the worm. Sometimes we catch the fish. We're going to see if we can't catch the fish this morning. So again, I'm probably going to stay patient because we're in range and in value unless something happens or something comes to me. The last thing I want to do on a Monday is go looking for trades. I'm going to let the market tell me and give me the opportunity, and then I'm going to jump. Then I'll throw my line in the water and see if I can't catch a fish. Prime levels, weekly kickoff low, last week's low. This area down here looks very important to me. Take a look at crude oil now. So crude, we're already through this week's weekly kickoff low. Hey, Ray, good morning. Yeah, we're going to see if we can't catch that three-legged wildebeest, right? Try and catch a good trade without expending too much energy. So here's crude oil. Crude's weekly kickoff low, 83.15. We're already below it. Now, what does that look like in the longer time frame? Well, the longer time frame, I would call this kind of medium time frame, but we continue to put in lower lows and lower highs. Our next kind of important inflection level I've got grayed out here. It's about 79.80 if we continue this move to the downside. So we're opening through an important inflection level where I'm looking for longer time frame traders to need to or want to adjust inventory. Here's the 30-minute chart here. Hang on one second. On Friday, we added 600 in open interest. Kind of a hollow rally, right? Now we're just coming into the end of rollover. Tomorrow's the last trading day for the October contract. We know we should be trading the November contract. That's where the volume is. So we're coming into rollover, which is always comforting to me because then I know that our longer time frame traders are going to be more focused on possible directional activity, which we're thinking is going to be what they're going to do today because of our proximity with the weekly kickoff low here. Look at how short we are in the overnight. We're opening with a gap, so we've got overnight inventory short through an important inflection level. We're opening with a gap. That looks like this is a kind of a low probability gap fill. There's a lot of space between where we are and where the gap is. We got last week's low. We got a naked point of control in the area. So we're going to be, if we're thinking about looking for opportunities for shorts, the overnight inventory shorts give us an opportunity to see some sort of a pullback, maybe towards weekly kickoff low, maybe even more than that. But I'm going to be looking for opportunities to sell strength unless we accept inside Friday's area of range and certainly value. So I'm kind of looking for opportunities to look for shorts here. Unless, of course, unless something changes. Something changes, and that may be at weekly kickoff low. If we can't accept down here in regular trading hours, which seems like we are working on doing now, we re-accept above that, then we look for opportunities for longs. But I think overall, I'm going to be looking for an opportunity for price to come back near or into yesterday's range to look for opportunities for shorts. Here's the opening range trade. Looks like somebody's in it. So here's the opening range low right here, 82.31, 82.76, so about 45 points. We did take a look above it. We're testing the low end of it. It's one of the things that's tricky about the opening range trade. And we know we're out of range, we're out of balance. So there's kind of a little bit of a higher probability of opening range actually playing out for us. This is a little bit rich. We'll go back and check that out later on. Here's the Nasdaq, which again has been much weaker. Here's the daily chart. Here's the 16th of July. This is the level that the S&Ps are attempting to hold, where the Nasdaq has already fallen through them, and we tested to lower levels. We've got a weekly kickoff low in the Nasdaq here of 11,737. 11,737. Pretty close to, well, that's the 30% off the all-time high on the continuation chart. So we're 10% deeper in the Nasdaq than we are in the S&Ps. But that's kind of the way it's been presenting itself. We've got last week's low, weekly kickoff low, and that 30% level just below that. Target-rich environment here. We added 9,900 in open interest on this pushback off of the low here in the Nasdaq. We lost open interest in the S&Ps, gained open interest in the Nasdaq. Open interest is the price level is a lot lower and weaker in the Nasdaq. This indicates possible new buying coming into the marketplace on Friday. Now, I'm sure a lot of that was short covering, but the fact that we added open interest says there's a little something else that we didn't see in the S&Ps because we lost open interest. We had some possible buyers come in and adjust inventories on Friday. Watch the overnight low. If we get the opportunity down here, I believe this is where the big fish are. Here's the 30-minute chart. Tested to a weekly kickoff low on Friday. It's a big rally. No true late spike in the S&P or the Nasdaq. So we're not talking about that, and we'd be talking about the fact that we opened below the late spike anyways, which is an indication of acceptance of lower pricing. So this whole area down here is ripe for opportunity. If you ask me, we've got overnight shorts already adjusting inventory. We're in range, we're in value, suggesting that we can stay patient and look for better trade locations as the day goes on. Overnight high, overnight low, basically last Friday's range. It looks interesting. Those levels look interesting. So I'm going to try and stay focused on the extremes here in the Nasdaq from Friday's session. Gold is, it looks like it's in deep trouble. And I can't believe it. Lower highs, lower lows, lower lows. We lost 5,100 on Friday on an up move. What does that tell us? Up move, losing open interest, short covering, which does take buying power out of the marketplace. And it's a hollow rally. We didn't bring in new money to the long side. We took out profits from the short side. So this is a hollow rally on Friday. So I'm really kind of nervous about this market finding a continuation to the downside because there's a lot of space down there. Weekly kickoff low in gold is all the way down at 1575. That's the next level where I really think the longer time frame traders will look to adjust inventory. And I believe that there's a lot of longer time frame shorts in this market because of the way it's been moving over the last few months. It's kind of shocking to say. I mean, we do see the dollar. It's back over 110 now. The 52-week high is 110.79. For some reason, the dollar continues to present strongly. Take a look at the 30. Last week's low is this purple line. Here's weekly kickoff low. That's a lot of space. We couldn't fill this gap. We do have some unfinished business above, and we'll get to that when we get there. Weekly kickoff high in gold is 1713. So we're really close to a point of changing this narrative that I'm currently speaking to see the market continue to move higher. I think if we get higher at all this week, there's potential for it to move. If we don't, there's potential for us to continue this move to the downside. So last week's low I'm kind of viewing as pivotal. Where are we? Well, we've opened in range and in value for the last couple of sessions. It seems as though, with this ranging that we're doing, the market might be slowing in its attempt to continue the move to the downside. That's why I think our weekly kickoff low is so pivotal for us today. I'm going to try and stay patient again because we are in range and relatively close to value. Again, my focus is always on the extremes. I think our overnight high and low might tell us some important stories when price gets there in the day time frame today. The euro is still range bound, still dragging along the bottom. Test of weekly kickoff low. Neither of the weekly kickoff levels have changed. We're looking for some sort of acceptance outside and continuation. We just haven't seen it yet. We added 9,900 in open interest on Friday, but Friday was switch day, where we switched from September to December. So we're still dealing with some rollover information here that's going to keep things a little bit blurry, especially with regards to open interest and volume. Good thing the euro really only rolls every 3 months. We skip the October and November contracts and go straight to the December contract. Let's take a look at the 30. So overnight high from Friday, the upper extreme of the 3 days of balance. Weekly kickoff low, last week's low, the lower extreme of the current balance area that we're in, and we're in the middle of it. I'm just going to try be patient and wait for something to change in the euro. It's still on the back burner for me. I'm not that interested in anything inside of balance or inside weekly kickoff high. Focus on extremes if you're going to be doing anything. Here's the 10-year. Okay, we've expanded the weekly kickoff low here just a little bit. See this swing low here back in June is the last bastion for buyers before there's really just nothing but space down below. So this week's weekly kickoff low in the 10-year is really kind of pivotal, and it's traded basically almost right to it in the overnight session. I mean, look at this move. Just organized, directional, one-time framing. As rates continue higher, price of the 10-year is going to continue lower. We know it's going higher again. It's all a matter of timing, right? So here's 1, 2, 3, 4, day 5 in this area of potential balance. Tested the weekly kickoff low, rejection on overnight inventory being too short, and right back into range. I mean, this move down here that happened early would have been wonderful to have the opportunity in regular trading hours. Unfortunately, we don't have it. We're already reconciling some of the overnight inventory that's too short in short time frame. And let's take a look here. Natural gas. We've kind of based our weekly kickoff off these swing lows. We did take a look at it, but before the regular trading hour open, we had overnight inventory to the short side. Let's see here. We lost 8,700 in open interest on Friday on this push to the downside. Long liquidation. Look at what we've got going here. We've got a head and shoulders. Where is the neckline? Are we accepting below the neckline? Is the neckline going to be resistance for us for a continuation to the downside? Because if we accept below weekly kickoff low, and I know it's hard to say this, especially with nat gas, if we were to accept down below the neckline and weekly kickoff low, it takes us back to these swing lows. The measurement is down to, let's just call it 550. Because we take the distance from the neckline to the top of the head, and then we take the distance from the neckline down, and that's your measured move off of head and shoulders. So we're looking to see if we can find acceptance below weekly kickoff low. We're already holding below the neckline in regular trading hours here. This could be a pretty sweet opportunity if it actually happens. There's plenty of visuals down below for the market to target and focus on. And if traders are focused on these weaknesses in structure down below, believe me, that's where they're going to go. I don't like nat gas either, but I mean, this is this is pretty set up. The problem is, how much can you risk? How much are you gonna risk on an opportunity in this market? I'm not willing to do that. Yeah, Brooksy's saying madness that gold, the inflation hedge struggling in this environment. It's crazy, right? It's like, it just doesn't matter. So what market is our hedge to inflation? It's not, well, I mean, you got Bitcoin lower today, 4%. It's back down below 20,000. A lot of folks, that was going to be our savior. It's not bonds. It's not treasuries. It's not gold. What about silver? Silver, I think, is held up much better than gold. So here's silver. This is the daily chart. I mean, it's still putting in lower highs and lower lows. I just think it's lost less. I'm starting to think I'm going to be like the Lone Ranger and Hi-Yo Silver. But I think there's a lot of time left in this current cycle that we're in. I think we're going to be struggling for a period of time. It's going to be a while before we get things straightened out, I think, and which is going to provide opportunities for day traders, opportunities for traders, not maybe that good for investors, but investors, we're looking many years down the road, and typically, yeah, cash is king, right? The almighty dollar. Yeah, you're right, Rick. I mean, everything else has been tumbling. It's the only thing has been the dollar, but that's so risky. Who knows what's going to happen, huh? So, all right, well, we've got session 1 of Top Step Strategies today at 12:30. I look forward to seeing everybody there, but I will be back for the recap at 3 o'clock. Hopefully we'll see you there. Orion, thank you again for letting us know of your success, and we're looking forward to seeing that continue. Ray, it's been good to see you back with us today. Mattress money. Vince. So if this was your first trip to the forecast, welcome. And if this is your first day commenting, keep commenting. We appreciate it. And again, if you like what you see, hit the like button. If you don't like what you see, if we're missing something or something we can do better, just email me, jhoagland@topstep.com, and we'll see what we can do. We really appreciate any feedback and constructive criticisms you might have. So I'm going to take my deep breath. I'm going to remember to stay humble, grateful, and creative today. Monday mornings are tough for me. I know that from my history, so I'm going to take it easy. Be careful. Look for trade locations as the day goes on, and I'm hoping for a great trading day for all of you. So I'll see you for Top Step Strategies, and again on the recap today. Trade well, get out there and profit. Always remember, trade for tomorrow. Trade for tomorrow. Tomorrow.